The office as we've known it, well, it's undergoing a pretty profound transformation.
It really is. A huge shift.
Yeah, we're seeing the strategic move driven by how we work now, all the new tech, and just different demands from tenants.
Exactly.
So today, we're taking a deep dive into flexible workspaces, our mission, to unpack the source material and figure out why institutional real estate investors are getting so interested in these solutions.
Hmm.
It's a fascinating pivot in what's usually a pretty slow-moving sector, so let's get into it.
Yeah, and what's really interesting is how broad that term flexible workspace has actually become.
Right, it's not just one thing.
Not at all. It's not just like your typical co-working spot or a temp office anymore. We're talking a whole spectrum,
Yeah.
from serviced offices right through to these
Mhm.
really modular, heavily tech-enabled environments.
Right.
And the boom in remote and hybrid work, well, that's fundamentally redefined how companies even think about needing office space.
Mm.
Well, they're moving away from locking into those big, static, long-term leases. Instead, they're looking for spaces that can handle teams that grow and shrink, and spaces that genuinely support collaboration when people are together.
Makes sense.
Yeah. And Dr. Pooyan Ghamari, the Swiss economist, founder of the ALAN platform, he really emphasizes this. He says flexibility, adaptability, and integrating the right tech. These aren't nice-to-haves anymore.
No?
No. They're core pillars if an office asset wants to keep its long-term value and pull in those really high-caliber tenants.
And it feels like there's more pushing this than just sort of changing work styles. There are bigger economic things at play, right?
Absolutely. Some incredibly strong economic forces are speeding this up.
Yeah.
Think about global economic uncertainty, for one,
Yeah, that's a big one.
and the constant pace of technological disruption, plus this growing focus on employee well-being. That all feeds in.
So based on the sources, flexible workspaces aren't just like convenient. They actually help with productivity.
They seem uniquely positioned to do that. Foster productivity, innovation, and maybe the biggest one, employee retention.
And retention is huge right now.
Exactly. These aren't just buzzwords. They are absolutely top priorities for corporate tenants today.
Okay, so let's connect that to the investors. Why is this model so appealing to them?
Well, think about the flexibility in lease terms and how you can scale the space up or down. That appeals to a massive market.
Like who?
Startups needing to grow fast, SMEs needing that agility, even huge multinational companies testing out new markets or spinning up project teams.
Well, a much wider net for tenants.
Precisely. And that directly translates into more diversified tenant portfolios for the investors, which, and this is insightful, fundamentally re-risks their investment.
How does it re-risk it?
Well, traditional leases often mean your vacancy risk is concentrated in maybe just a few large tenants. If one leaves, it's a big hit. But flexible models spread that risk across lots of different tenants, often on shorter terms. So fluctuating demand, which used to be a liability, actually becomes part of the model's resilience. It's baked in.
Interesting. So potentially less risky and maybe more profitable.
That's what the data suggests. Alan's blog, for instance, indicates flexible office assets often get higher rental premiums,
How much higher?
sometimes 20–30% higher, apparently, and significantly better occupancy rates compared to traditional office setups.
Wow, okay. So powerful economic drivers pulling investors in. But what's actually making these flexible models work day to day? What enables it?
Yeah, that leads us straight to technology. Tech is really the crucial differentiator here.
In what way?
Well, integrating smart building tech, IoT devices, AI for space management.
Yeah.
It's not just fancy gadgets.
No.
No, it genuinely improves the experience for the tenant and makes operations much more efficient for the owners.
Can you give some examples? I know the Alien platform has some specific ones.
Definitely. Imagine walking into an office and just booking a desk or a meeting room instantly on an app.
Okay, no more wandering around looking for a spot.
Exactly. Or real-time occupancy sensors showing you which collaborative areas are free or where the quiet zones are if you need to focus.
That sounds pretty useful.
It is. And on the management side, think predictive maintenance, fixing issues before they even become problems for tenants.
Right. Smooth operations.
These are things tenants really value, makes their workday easier, more productive. And there's another angle too,
Which is?
sustainability.
Yeah.
Technology helps optimize energy use, lighting, HVAC.
Ah, boosting the ESG profile.
Exactly. Which, for institutional investors now, that's not just a nice to have.
Yeah.
It's often a critical factor in their investment decisions. responsible investing.
Okay, so summing up for the investors then, what are the big strategic wins with flexible office spaces?
Well, several key advantages. First, resilience. Resilience against market swings because they can adapt quickly to tenant demand, mitigating those vacancy risks we talked about. Second, better tenant retention. Flexible contracts and those desirable amenities, the tech. It keeps tenants happy, reduces churn.
Makes sense. Less turnover cost.
Right. Third, premium pricing. Because there's real demand for these ready-to-go plug-and-play solutions, landlords can often charge more. And finally, that portfolio diversification we mentioned. Access to a much broader range of tenants, freelancers, startups, all the way up to multinationals.
So how do investors actually capitalize on all this, maximize these benefits?
Good question. Dr. Ghamari really stresses using digital platforms. Investors who leverage platforms like A-Lens to manage these assets get better insights, more control.
So optimizing returns?
Optimizing returns, yeah, but also really enhancing tenant engagement and satisfaction. It's about managing the whole experience digitally.
And what about practical steps for investors or developers thinking about this space?
It really starts with prioritizing retrofit and smart design. It's not just cosmetic upgrades. It's about creating genuine modularity. Thinking about how existing buildings can be transformed so spaces can literally be reconfigured, say,
Yeah.
from open plan to private offices, maybe in just a few hours.
That ability to physically change the space quickly, but is retrofitting always the answer? What about the cost versus maybe just building new, flexible from the ground up?
It's definitely a spectrum,
Yeah.
you know. The best approach depends on the specific building, the location, the market.
Okay.
But the key point, whether it's a retrofit or a new build, is that you have to invest in the underlying technology to support that flexibility.
The digital backbone.
Exactly. The smart systems for booking, security, building automation, often unified through one platform. That's what makes the physical flexibility actually functional.
Got it. What else?
Emphasizing sustainability is crucial. Green certifications, energy efficiency that attracts both ESG-focused tenants and investors.
Right.
Developing hybrid leasing models, too.
Yeah.
Offering those shorter-term, scalable options alongside maybe some longer ones, catering to everyone, not just the old way.
Adapting the contracts themselves.
Yes. And finally, constantly monitoring market trends. Using data analytics to see what tenants want, where demand is shifting, and tailoring the offerings. It's not static. It's an ongoing process.
Very dynamic.
It has to be.
Okay. So let's try to wrap this up. What's the main takeaway here?
Well, to synthesize it all, I'd say it's this strategic convergence. Adaptability, cutting-edge technology, and a real laser focus on tenant-centric design. That combination is fundamentally reshaping office real estate investment.
And the benefits for investors are clear.
Yeah, I think so. From reducing vacancy risks and getting those premium rents to building diversified portfolios and really improving tenant satisfaction, it's a powerful mix.
Okay, so here's a final thought then for you, the listener, to chew on. If the office itself is becoming so much more flexible, more adaptable, more tech-driven, what does that ultimately mean for something like corporate identity? Or even for the future of our cities?
That's a big question.
It is. If businesses can exist with this constantly shifting physical footprint, what happens to, say, a city center that historically relied on big, permanent corporate headquarters? It's a question that definitely goes beyond just real estate, doesn't it? It touches how we define work and maybe even the communities we build. Something to think about.